The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hour on this very volatile day. This is, of course, February the 6th. And we're looking at the Dow now up 49. It was down 460. Then it was up. Actually, I was on the road, so I'm not sure what it was, but I know it was up about 200 and something. I think it's 300 and something. That's right. And then it comes back down, goes down about 300. Now it is up 57. The S&P is down 540, so the Dow is at 24,398. The S&P is at 28,000. Sorry, 28,000. Let me just get this so I can see it a little bit better. I don't want to frighten anyone. 2642.02, down 667. Now this is really interesting. The S&P cash is at minus 6.58, and the futures are up 31.75. Same chart pattern. Of course, that's based on many factors of where we closed, right at the close when the market was tanking, etc. What's really important about this is that if you look at the ESH18, the March contract, we tested the 200-period exponential moving average. We went exactly to the 200-period simple moving average right there. That was the low today, established at 2529.00. The 120-minute chart made a trough G, seventh wave down in the Chapman wave. That's where other things can happen as well. This is where we had a big spike to the upside. I drawn in this for my subscribers to my opening call. I always show the E-mini with the daily, weekly, and the 120-minute chart. These are the most important for us. And what we were looking at was I drew in the arch formation, which I thought would be a bounce. Now, what's really interesting about this, and I had to ponder it a lot. One of the reasons why I couldn't tell how far down we would go today after being down almost $1,000 last night, after the 1,000-point drop yesterday, it was very difficult to assess exactly how the volatility would work in timing. My thinking was that if it was even possible to get the low of today, there's a real good chance that even if there's another retest, we'd be looking at worst, a very choppy market with an upside bias for a while. And one of the reasons being is that the VIX index, VIX.X, there we go, which hit a high today of 50.30, is now trading at 33.56. And what I said is, wouldn't it be nice to short the VIX as soon as we know that there's a turnaround? Well, it's real tough to do. But look at this. If you're looking at the volatility index, let me get rid of this 120-minute chart. We have gone to 50 when the China U.S. interest rate, that fiasco that occurred right there, I believe that should have been August of 2015. 53.29 was the high. Well, we don't have anything like that. We don't have a conflagration going on. We have a lot of subsidiary things, but really to skyrocket it into the 50 area, that's really something. So I'm looking at this, and I think a huge amount of the work to the downside has been done, and that if you want to, you can start, at least for trading positions, you could put on small trades right now. I'd keep it small. There's no need to go big. Small trades, and just let them go where they're going to go. We're like a cork in water. We've been pushed down. Now we're popping up towards the surface. At some point, there's going to be bad news again, and I think we'll be doing some retesting. But the volatility index, the history of this volatility index says that if at any point in the next 3 days, what are we, Tuesday, if by Thursday, maybe Friday, if the VIX index is below 18, This could be done for now. So in terms of setting up positions, intermediate term positions, I'm not 100% sure yet that I'd even go that far. But shorter term positions, I don't see any reason. And that's one of the reasons why I said to subscribers, for all our short positions, start taking something off. That's the, we had a bonus yesterday. It's very seldom you get that kind of one-day rate of return. Take profits, keep a core position, and let's go from there. And then we might have to trade out of that core position with not the best price, because the best price was obviously early this morning. But I'm thinking that's the way I have to deal with it. Let's go through these, and it's really important. We want to go through the numbers now. So I want to go to the QQQ series, because they are right now trading at 158.72 plus up 60, having gone to a leg B. Now, that's the other thing. In my work, an incredible move to the downside in a single leg, or almost like just two legs down with the briefest of a trough A and then immediately a leg B, a big leg B starting down. That invariably says if you get close to a left side key support, in this case 155.70 was the low back in right there. Back on the 29th of December, we went today to the 100. Did I just do that? I should have remembered that. 155.10 level. So we went 60 cents lower. That's an arch formation. That's suggesting that, yes, a key support level has been hit. We've given back all of January's gains, all of December's gains, and now we're balancing off the lows as a key support. I think that's support that we can monitor and consider it to be really important support. We've established some base of recognition. That's what I like to do. 155 to the QQQs. The IWM got smacked, went down below the 200 period exponential and simple moving averages. It went to a low. It had a high of 160.63 on the 24th of January. Wow. 2 weeks later, what are we looking at? 144.24. That is a 16. That is 10%. That's a big move. Wait, 14. Yep. So that says, here again, trying to establish a base in leg B to the downside. Really good chance that we get some kind of a rebound. As long as nothing happens, as long as they pass and they don't start fussing about the funding the government and things like that. Right now, I think the worst is over news-wise, plus the key metric would be getting some kind of the calls that go out for payment, from the brokerage houses. Let's just say 10:30-ish. Usually that happens. I think we've established some kind of a base of support that should hold over the coming few days. Let's go to the gold. Gold is down. It was down when I last looked. Yeah, down 5 at 1331, going down below that 9-period moving average. The MACD is negative. Stochastic's very negative. The weekly chart has 1325 as support, and it's at 1331 right now. Silver right now is trading at 1660, also very negative chart on the short term. The dollar, now this is going to be very interesting. The dollar had bounced a little bit. It's at 89.66. I think the dollar isn't going to have a great move, but I think it's going to have a move towards the upside in this particular period. We'll come back and we'll talk about dollars, talk about rates, we'll talk about a lot of things. Meantime, back at the ranch, watch 26.60, 26.57 for an upside break.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, so what I was saying just before we took the break, if the E-mini can get to the 26, break above 26.57, there's a real good chance that the the cup pattern that we're looking at here in the 10-minute, both the 10 and the 5, could go to the 2680.75. You can tell that the market is starting to try to get a feeler for a lot of people must have sold this morning. I suspect that there are fresh faces now that have been buying, and we'll see. I think those fresh faces are going to have a chance to let me just get rid of this here. What's going on? Okay, done. To at least have the benefit of waiting, having patience, and an opportune time getting some kind of positions. I'll be having an update for my subscribers to my opening call, my daily newsletter, straight after my show at about 1:15. I'm just going to choose maybe during the breaks. I'll start looking to see what in fact we'd like to nibble at. I wouldn't get carried away. And as I say, before the break, I was saying the dollar looks like technically it's starting to at least build a base that says the 89 should hold a support. Sorry, the 89 to the 88.70s mustn't break under 88, but the 88.70s. And if that's the case, yeah, we could have a little bit of a rally in the dollar, but really it's going to be a little bit of a rally because it has to close above the 9-period moving average for maybe the first time in weeks and weeks, and that'll be above 90.83 for me to say, aha. Now we can even look at it in terms of daily, weekly, and possibly the monthly, because the monthly has tested the 200-period moving average. It's under it right now, or it's right on it right now at 89.67. I'd like to see what happens. We've also got the EUR-USD, and that's the euro-dollar currency pair. So that's under the 9-period moving average. It's kind of in a sideways trading range, making slightly lower highs, slightly lower lows. Leg B, I'm calling it still a B in the weekly chart. We'll have to see how this holds out. It really must hold 1.230. At this point, it's at 1.238. So we'll see there. And the USD JPY is trading at, that's the yen, is 109.14, pulling back some. I will say that the dollar and the yen are not going to go very much higher unless the yen is able to break above 110.60. No, unless the yen is able to close above 110.60. Now, let's do something that's quite important. I want to go to the TLT. trying desperately to make that at 118.64, the low of yesterday, a trough E by having a higher low today. The weekly chart really doesn't look very good. The monthly chart held it. You remember I had to call yesterday. We were looking at, oh no, that was in Tom's show in the afternoon when I did Tom's 4 o'clock show. Don from Washington, D.C. called in, and we were talking about the support level that the TLT is holding in the monthly chart. That's going to be very important. But wait, let me show you something else. Gee, let me do it now. I'm not trading, so let me get out of this. Close the workspace, save the workspace. Got to have your routines here, otherwise you're in trouble. And now we want to go to the LT, the long-term chart. There we go. Okay, so this long-term chart coming up in a moment will show you the triple yields. And that's also what I was talking about with Don from Washington yesterday. In the yields, the 30-year, that's the white TYX, the brown is the TNX, that's the 10-year T-note yield, and the 5 is the FVX, the cyan color is coming up in a second. Kaboom, kaboom, kaboom. There it is. No, kaboom, kaboom, kaboom. There it is. So here we are. We're looking at the one behind. We're looking at the pullback, a minus 18 cents at 30.49. I would not be surprised. You see, this is why I think that the market could rally a little bit into next week, and we'll be watching the bank stocks very closely. Why? Because I think yields are going to pull back for about a week or so, a week and a half maybe, and then we start to head higher for that leg D in the weekly chart. This is leg C in the weekly chart with a high that was made at 31.26. We're trading now at 30.50. That's a big move down. And the TNX, the brown one, is the 10-year. It's trading at 2.755. Why? This week, just yesterday, was screaming up at 28.62. And the FVX, the 5-year yesterday, was 28.62 and trading right now at 24.87. That's not right, surely. Oh, that was last week. It didn't make a new high this week. Oh, that was last week, 28.54. Oh, isn't that interesting? I got a feeling yields are going to be going down. T-bonds are going to be going up in this short period. Very interesting. And if you look behind, you'll see wood, which is the iShares Timber Forestry ETF, pulling back, held that red line we spoke about, the dashed line support, but the housing sector, 3.58 up today, 328. I think that this is going to be a peak F top in the weekly chart. We'll know on Friday, but I think there's a little problem there, at least in the shorter term. I just wanted to show you something. I was asked about it once, and then I completely forgot to go back. This is the South African market. This is the South African stock index. They do have some gold stocks, but mostly it's industrials, etc., and everything else. Look at this. A peak E in the monthly chart for this index would suggest that it's going to be pulling back. If there's no new high this month, I don't know how it can get there. January's high of 474.75. This is the Dow Jones South African Stock Index. So the pattern is exactly like their major index, but the price is different because it's made up in a different way. So watching this one closely. Let's get out of that. What we want to do is to go to, let me get out. I want to do something else. Close the workspace. I want to show you something quite interesting. First, we'll get out of this. Yeah. Now, I want to go to crude oil. Got a lot of questions. I'm going to get to the questions in a moment. So the TLT trading down 45 at 120.26. I'm suspecting that it's going to try for the 122 to 122.70 area. And if it does that, you'll see bond yields start to pull back. If there is a break in the TLT below 118.64, wow, be careful. That's all I can say. Okay, here we were. We want to look at high-grade copper. High-grade copper is acting, yeah, it's just stuck in the range. Second in range at 3.19 is stuck between 315 and I would say 322. You've got crude oil. Crude oil right now is down 29 cents. Looks like the other commodities, it's pulling back under the 9-period moving average. Could have a sudden spike, but I think it's having a rest. I'm calling it a rest. Remember I said I don't see it as a short, even though it could go down a couple of points. Why? Because that weekly chart is still very strong. So there could be sudden spikes to the upside. Now let's do this. IYT, which is the transportation index, the iShares, huge candle today. Nice green candle, up 1.31 at 187.85, having made a low. And this low is actually took it to almost the high of peak C, October in the weekly chart. October, the week of the 13th of 2017, 181.57, and today's low is 181.52. Took it out, and now it's trying to bounce a little bit. So that's the RYT. There are other things we want to look at. We want to look at the XLF. And I'll be back. Dow's up 112, S&P's up 1.5, but those futures are up 40. Woohoo, woohoo. I'll be right back. XLF is down a penny at 27.87. I think rates are going to have something to do with this. We'll talk about that.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Everyone, we're at 2657.75, 2658 right now, spiraling upside. Dow's up 202. So the E-mini that I'm looking at has this cup formation, and I suspect that there will be a test of 2680.75, the high of the day. At this rate, I think this is really nice. It's not just a relief rally here. What we've got is, look, you've got VIX. Look, the VIX is down 18% from yesterday's close, but that's nothing. It's from the high of today, 50.30 to 30. That's 20 points. What is that, 38% or something? That's a big percentage move down, and I suspect it'll drop later in the day. Now, the perfect thing. So there's this XIV. It's so interesting because I was saying to myself, so you shorted for your head subscribers, short the Dow. We didn't get the highest price, but we got a reasonable price. We short the short the semiconductors, short a home builder. But the XIV was the one that I was really looking at because it moves, it's the opposite of volatility. So that means that if the volatility goes higher, which I was anticipating would, I had no clue that it would go to 50. I mean, I thought, yeah, we'd get a nice big pickup in volatility. But so the XIV, I'm not even sure, I don't think we've ever done that. We've bought the XIV. I don't think we've ever short the XIV, which is called the VS inverse VIX short term. So what happened was, I didn't even realize this could happen. I'd heard about it, but I completely forgot. If we were short this silly little instrument, it is down 83.57 at $15.43. Yesterday it closed at 112.50, made an all-time high with a Chapman wave 2-bar reversal at the very top, 146.44. Trading at $15. I don't even know what you do. What if you're short? Are there shares to be able to cover it? I'm not even sure what's going on. It has to do with some arithmetic, some mathematical formula. But evidently, from what I understand, is that when intense selling comes about, this thing can actually fail. Is this a failure? Down 83% at 15.43. Wow, I would say that's a failure. So I had it on my list. I thought, let's try shorting that because the VIX should rally. Wow. Yeah, I have no idea what to say. We didn't. And maybe I should say fortunately because, yeah, it looks like fantastic on paper. I'm not sure. Are you able just to get out or is this closed? What's going on? I hate when that happens. Your money gets tied up. You're just kind of stuck. Anyway, so, yeah, I saw down 92% at one point as the ticker was going by last night. All right, so that's that with the XIV. Wow, what an instrument. It was looking great going up, and now it doesn't look too good. Okay, that's enough. So when I'm looking at the XLF at this particular point is up 8 cents at 27.97. It looks to me that I can draw. You remember I just drew for the 120-minute chart for subscribers. I drew the arch formation, so that's the pattern that I'm looking at. It looks to me like I can do the same thing here for the XLF. Short term, I think there should be a nice bounce. If no other bad news permeates the market over the next 2 days, there's no reason why this couldn't bounce. It's been hammered from the 30. What was the high? The high on the 29th was 30.33. Let me type that in. 30.33, 129.18. And then what happens? What happens is it plunges down to today's low, and today's low is 27.17. But this is just a leg B to the downside. It goes leg A. Almost certainly there should be a trough B tomorrow. I don't see what the news will be to make it go to a lower low. So what is this? Whoever you are, I'm sorry, I cannot answer. So the next thing we're looking at is within the context of the 9-period moving average in the weekly chart and the daily, you've got 29.06 in the daily as resistance and 28.59 in the weekly chart. I don't know what it's going to actually take to get there, because if bonds start to rally a little bit here and yields start to pull back, they've lost the edge. They need higher rates. And even as the rates were screaming the last couple of days, the financials were pulling back. So look at Goldman Sachs. This is one that's interesting. Having a great move today, up 5 at 254.29. Didn't take out yesterday's low. Yesterday's low was down to the 243, was it? 241.50 area. 241.53, and now it's at 254. So, yeah, there are trading vehicles right now that might work. I'd like to look at Amazon. There we are. Amazon, nice candle today, up 28 at 14.18. Had a huge long-legged doji type candle yesterday with a low of 1320.72. I'm not sure what's going to get it back down there, but I suspect that in this particular interim period that Amazon will, in fact, trade down there. Will it make a new high? There's enough buying to say that at 14.19, it's only got 80 points to go to make to test the old high of 14.98, round number, made on the 2nd. That's going to be interesting. Would I be buying it? Would I be selling it? If you're a very long-term holder, I wouldn't do anything yet. I'd start to do something if it takes out the low of yesterday, 13.20. Let's call it 13.20. But at this particular point, this is a monster. It's one of the great stocks, not just on the market. It's just one of the great stocks, Amazon. Okay, I had a question about Boeing. Look, Boeing at this particular point is up 574, 334. One of the things that's been interesting me a lot is, and I have to put this little inverted V-shaped pattern here as a little cappy on the top of the E. One of the things that's really interested me over the last year and a half is how many stocks just soared through 300, went right through 500, and we have stocks in the thousands. Not that many, but we do have stocks in the thousands. I mean, that is incredible. What I am looking at is Boeing looks to me, based on the daily, weekly, and monthly charts, in a rest period. And that rest period says lower lows and lower highs. Maybe slightly lower highs and maybe slightly more lower lows. But I'm watching it because if Boeing takes out 310 on a closing basis, it's going to be a real quick trip to 306, 302. That's my thinking right now. So the question is Boeing, big moves. Yes, big moves. That high that was made right there on the, was it the 2nd or something? The high that was made on the 1st at 361.45. 361.45. Here we go. 361.45. That was on the 1st. 21.18. I think that's going to hold for now. So it's going to. This is what I want to say. I believe that the SMHs, semiconductor, which led us on the way up, led us on the way down, has the same, look, the weekly chart has the same pattern as the daily chart of Boeing. I'm suggesting to you that unless the SMHs, the market vector semiconductor ETF, making a low this morning of 97.05, having traded at 108.56 back on the 23rd of January, I'm going to suggest to you that there's a good chance that because of the spectacular move that it's had, because of this failure pattern that I'm looking at in the weekly, because it's a leg E in the monthly, that there's a pretty darn good chance that the semis need to digest the gains longer, and that 103.30, the 9-period moving average, round about 103 to 104 is in really strong resistance. I'll be back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Folks, just if you're looking at the very short-term 2-minute E-mini chart, that peak D that was made back at about 10 to 10 this morning. Was that last? Yep, that's this morning. It's made a very big bowl formation, and it says that the high that was made of 2680.00, that high should be hit at about 12:52 today. So we've got about another, whatever it is, 12 minutes or so, 10 minutes, and we'll see if that works out. Very strong support at 26.52, 26.57 to 26.52, and it is trading in leg. I've got this as an F. Technically, I should give it an F/B because the technicals are still looking good, so I'm going to put F/B. We'll see if it does that. Get out of this. I was asked about Bitcoin. Patterns repeat. Doesn't matter what, it just doesn't matter what you're looking at. You see the pattern I just made, the bowl formation? Well, this is a 15-minute chart of Bitcoin. The high that was made right there at 7469, I believe it is, at 1545. That was on the 5th. You come down, you make the H pattern. It's a successful pattern because the MACD is starting to rally. And what's really important about it is that it took out the left side peak right there at 6,700. And what happens is you've got, look, the cup formation, I can't draw on this, but you've got yourself left side, right side price time match. And it went exactly there on time. It failed to take out that high when it went to 74.20 is the high, and the high we were looking at before was 74.69. So, yep, it's made this cup formation. Now it's making a kind of a handle. Maybe it'll go down a little too deeply, but yes, the patterns that I look at suggest that, I don't know what the question is, but I'm going to, if I can, change the time frame. I don't want to mess this up. Yeah, I'm not able. Oh, there it is. So let's go to 2 hour. Yeah, let's go to the 1 hour for now. So the 1 hour says we're in leg A, we're in leg B to the upside. The technicals are improving, and it has to take out to start leg C. It has to go above 74.20. The absolute key support level, if it takes out 67.21, 67.20, let's say, that's a real problem. So far, Bitcoin is acting quite well. It's almost replicating what the market's doing. Isn't that fascinating? It made a low, 6,000 round number low. I think that's it. That's what's printed here. That's going to be interesting to watch. It's up. It's up a lot. 850. Yeah. So I hope that helped you a little bit. Let's get out of this. And what we want you to do is a couple of questions came in. What am I looking at? Oh, there's Jerry in the back bay. Jerry, how are you?
Yeah.
Hi, Jerry.
Hi. Yeah, I'm. Thanks. I'm have a small position in RWM, and getting a little nervous about overstaying.
ProShares Trust Short Russell. Oh, so Jerry, I'm going to make a suggestion here. You know that this is an extremely volatile market without real headline news. Yeah, they're talking about rates, but rates have been moving up, and it's only the 5-year that is very different to the others. What I'm going to suggest to you, because the Russell IWM iShares trading at 148.28 up 36 cents, hit both the 200 period moving average and the 200 period simple moving average. The MACD and stochastic are really ugly looking. The weekly chart is ugly looking. If you are holding this for a period of time, then let me just go back to what you're looking at. The RWM, this is what I recommend, and this is what I recommend to subscribers on my opening call. Just for comfort, number one, but most importantly for money management, when you have such a spectacular gain in such a short period, you really have to, it's a mental thing. You've got to reward yourself. So have you taken anything off yet?
No, that's why I'm thinking of doing it, yeah.
So, make it real easy for yourself. Take something off right now. And because you spoke to me with that with a little bit of tension in your voice, I'm going to say, take at least a third off, because you want to be able to both have the potential to add back that third if things start to deteriorate again. And in this environment, I suspect we're going to see this is going to be a trader's dream right now. It's already been for about 2-3 days. It's going to continue to be that way. Intermediate term, if I look at the IWM, almost everything I'm looking, where did I put that? Let me just go back here. So let me just say your RWM is trading at 43.36. It's only down 12 cents, down 28 cents. I would definitely take something off. And what I would do is I'd try to keep a core. And if you're in at a much lower price, try to keep that core. And I'd only have the bit I take off now as cash to put back, perhaps in the IWM if certain things occur, which I'll tell you about in a minute. And the next thing is, if you are looking at putting it back, let's look at the IWM. I keep typing on the chart. I need to type over here, because this could quickly pull back to 42.50. You know that. So that's giving back quite a bit of percentage gain. So let me just go to the IWM, and I'll tell you what I'm looking at. In the IWM, the weekly chart is suggesting that if there is another break to the downside, and at any point during the day there is a 3-hour period where the IWM starts to trade 3 hours, yeah, I make it a minimum of 3 hours, starts to trade under 169, let's call it 169, I didn't say 169, I mean 146.90. That's what I meant to say. I'm going to make it right. 146.50. It's trading at 148.36. If it goes down 2 points and holds there, but it must hold there for a period of time, there or lower, that IWM is going to probably test the low that was made today. I don't think it's going to do it very quickly. I think it's got a few days, maybe even a week. I'm not sure. You never know in this environment. So that's why I'm saying keep the call. But I definitely would take something off just because of the speed. This is like a leg B down with the tiniest little trough A. This speed suggests the pattern I'm going to draw right now. This really does suggest an arch formation. There's going to be a bounce, and then there's going to be a pullback, and the next pullback is going to be the test, because if it doesn't take out 149.29, you could go for maybe 2 weeks or 3 weeks before the next really big sell comes along. Maybe, let me put it this way. You can go for 7 to 11 sessions before the next big sell comes along. But if it's not even able to get the arch formation, just makes a little bit 151, 150, 151.30, and then pulls back and goes to 148, that'll suggest at best sideways, at worst it retests the low. So the weight of evidence for me says that there's time and probably price involved. I wouldn't be in a rush to get out of the whole position, but just to reward yourself, I'd take something off right now. Hope that helps you.
Thank you. Thank you.
Thank you for calling. Always appreciate that. So, folks, let's just go through that. We're about to take a break. I just wanted to talk to you about the mental aspect. I spoke about it yesterday when I did Tom's show at 4 o'clock. I want to go through that again. I want to go through it because I want it for myself. Sometimes it's easy for me to tell people what to do, but to actually do it, I've got to go through the whole process for myself. So I'd like to do that. So the Dow's up 134, S&P's up 7, the futures up 45 points. That's incredible. I'll be right back.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
About Bitcoin, is there a daily count? Yes, the daily count. See the single leg A up, single leg A down, then it has a bounce, and then it starts a new one, A, B, C, D. It's in leg E. But the MACD is still quite negative, and the histogram is still quite negative. So this says it's not quite out the woods yet. Now, what's fascinating to me, I really should call TradeStation and see if I can get this. I can make do it on TradeStation. So what I am looking at here is that it's very interesting that this pattern, single leg A down, this is like a microcosm, I think, of what we might be looking at in the market, that there's going to be an H pattern with the bounce coming. It's going to take time, and it could be, it depends on how big the bounce is, but it could go into next week before there's suddenly bad news again to retest the lows. But I think that the low that we made in the, let me just do this right now, the low that we made, let me get out of this. Right here. So the low that we made in the futures, that is in the YM, that is the Dow continuous contract, right here, 22,994 is the 200 period exponential moving average. We just missed getting there. Nice candle today. I suspect that this is going to become more like a magnet over the coming 2 weeks or 3 weeks. So watch it closely. Also, it's not even close to Friday, but this candle, if it stopped right here, would be a Chapman wave Roman candle coming off a top. You don't usually get huge candles like this coming off the top. Usually it's up there and it's a smaller candle. But this is very simple because it says to me in the futures, if there is a trade under 24,000, holding under 24,000 is a weekly chart for a day and a half, there's a real good chance we're going to test and break the low that was made today. That's the way I'm looking at it. It would take a move to at 24,382 right now. It would take a move holding well for 2 days above 25,200 to say, hey, you know what? This is really good. I still see no chance of an all-time high, but I do see the arch formation. I hope that's a lot of information that you can all use. Check out my opening calls, my daily newsletter. Go to the front page of TFNN. Hopefully you'll find it informative and financially beneficial. So thanks for being here. Steve Rhodes coming up right now. Then you've got Dave White, you've got Tom O'Brien, and Andy Harris. Have a great day today. Tuesday today. I'll be back tomorrow, Wednesday.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.